Hi, I'm Jim Juback, and welcome to the Trend of the Week video. Trend of the Week is, hey, you can get 5% in a CD, almost 5% in a money market right now. Thank you, Jerome Powell and the Federal Reserve. Okay, if you like this video, please give it a thumbs up. Subscribe to my YouTube channel, that way you get notification of when we do the next one. Okay, so one of the things that's happened is that you've seen a huge rally in short-term yields, which means that the price of short-term treasuries has come down. So right now, I was noticing the other day, you can get a 5% CD, it's an 11-month CD from Capital One, $0 minimum, and that's 5% yield is pretty good when you're looking at a stock market where the returns for this year are kind of iffy. 5% is not bad, period. Money markets. I saw one from CFG Community Bank, 4.45 with a $1,000 minimum. So if you're looking for a fund, one of the ones I like is PIMCO, Enhanced Short Maturity Active Exchange Traded Fund. Mint is the ticker. The SEC yield, which is the last month's yield annualized, 4.63, trailing yield 1.88. So I think you're now looking, being able to get more than 4.5. One of the things that I like about this is that it's an actively managed fund. So it's not all in treasuries, it's not all in corporates, they shift around. And I think that's going to be critical because this is going to be a kind of iffy environment for income producing investments, because I don't know what the debt ceiling crisis is going to do to prices in the treasury market, for example. So if the market starts to feel there is a serious possibility of a U.S. default, treasury prices are likely to go down, which puts yields up, which means that if you hold a bond fund, you're going to get hurt. If you hold the bond till maturity, you won't get hurt. So one of the things you might think about is, in an environment like this, whether you want to hold a fund or whether you want to buy the bonds from like TreasuryDirect. Right now, the 12-month Treasury is yielding 4.92, 6-month 4.95. You can go out a little further to 2-year, that's 4.61. Also buy the Treasury, and then you really don't care what happens to the price. If you get a rally, you can always sell it. But on the other hand, if you just want to hold it to maturity, that means you get the yield. I'm going to try to do a run through of all these possibilities and some of the upsides and downsides in my paid site and my free site. Free site is jubackpicks.com. Paid site is jubackam.com. And that should go up today, Friday, and we'll run through all of those things so you can follow the links to get those posts today before this video goes up. Thanks very much for watching, and please tune in next time.